I know a lot of pet sitters and dog walkers struggle with deciding how large of an area they should service, or if they can afford their next marketing initiative, or if they can afford to hire or not. And if you want to make decisions like that that are based on knowledge and facts and data, instead of just trusting your gut and hoping for the best, you need to have a grasp on the financial health of your business, and you need to know your cost per service and your profit margin per service. Last week, we went over the basics of bookkeeping, and I talked about how you can accurately track all of your income and expenses and make yourself a profit and loss statement. And in this week, we're going to go on to part 2 of this series and talk about how you can find your profit margin per service. I said this in part 1, but I'm going to reiterate it here that I am not an accountant, I'm not an attorney, and nothing that I say in this video or any of my other videos should be taken as legal or financial advice. With that being said, let's not waste any time. I will jump right into all of this after you hit that subscribe button to stay up to date with my weekly videos here on the Doug the Dog Guy YouTube channel. The first thing that I want to mention as we get into this is that we will all have different expenses every single month in our business. So we're really looking at this from a broad perspective. And I am going to work through a very specific example in this video, but the idea here is just so that you can take this knowledge and learn the math that I'm going to talk about to apply it to your own specific situation. So if the numbers that I use in this video are way different than your own numbers, don't come for me in the comments. That's not the point of this video. I also want to mention that the first year of your business, you're going to have a lot of expenses that you won't have later on. Things like getting a logo and branding made, getting your website made. You know, these are big initial expenses that you have on the front end that you won't have again later on. And if you want to get a better idea of what those startup costs are, I have made an extensive video covering the startup cost for pet care businesses, and that's actually over on the Time to Pet YouTube channel, so I'll link that down in the description below. Now, all of that being said, your expenses are going to fall into one of two categories. The first category is your fixed expenses. Now, these are the recurring set expenses that you know you can count on every month or every year. You know, these are things like your liability insurance and your phone bill, the set cost. Now, the other bucket is your variable expenses. This is basically everything else. You know, these are the random things that come up from day to day, like buying a new leash or buying dog treats and things like that. Now, as we move into this example here, I do want to say that there are different ways of looking at all of this, and there are different ways of calculating all of this. So what I'm going to do here is I'm going to show you how I look at it and how I calculate all of this for my own business. And this is what I would teach you if you contacted me for a private coaching session to go over your own profit margin per service. So if we pull up that bookkeeping spreadsheet that we made in last week's video, the first thing that we're going to do here is we're going to add up all of our income for the month. So let's say, for example, that you came and walked my dog 10 times and I paid you $400. Then you went and did a 5-night pet sit for Tom Cruise. He paid you $1,000. Then you did 30 drop-in visits for Oprah. She paid you $1,200. Then you went and took care of Taylor Swift's cat, and she paid you $400 for 10 visits. So you made a total of $3,000 for 55 services. Now that we know our income for the month, we're just going to set that aside for a minute, and now we're going to add up our fixed annual expenses. Now, again, these are going to vary a lot from business to business, but something that we will all have to pay is an annual fee to whatever state that you live in to maintain your LLC. And here in Florida, where I am, that is $138.75 per year. Something else that we'll all have to account for is liability insurance. And I personally use Business Insurers of the Carolinas, and they do require you to pay for a full year up front. So let's assume here that your insurance is $1,000 for the year. Now let's also say that you use Squarespace for your domain hosting for your website. That comes out to $96 per year. Let's say that you also use Canva for designing your graphics and your social media posts and your flyers, and you opted for their Pro membership. That's $119 per year. And let's say that you signed up to be a member of Pet Sitters International, which I would recommend that you do. And that's $155 per year, bringing your total annual expenses to $1,508.75. Now what we're going to do is we're just going to divide these annual fixed expenses by 12 to get their monthly cost. And that comes out to $125.73. So now we're going to set these annual expenses to the side and go on to our monthly fixed expenses. For your monthly fixed expenses, let's say that you're using Dialpad for your phone plan. That's what I use, and it's $35.33 a month. Now let's say that you also use Google Workspace to get yourself a custom email address. If you guys want to email me, it's doug@badtothebonepetcare.com. How you get that at yourwebsite.com email is through Google Workspace. That is $7 a month. Now let's say that you have taken your bookkeeping to the next level. You've graduated from that Google Sheet that we built last week into QuickBooks, and you are paying for their Essentials plan, which is $37.50 a month. Now, let's also say that you are using Time to Pet for your pet sitting and dog walking software, which again is what I use and what I would highly recommend that you use. Let's say that that comes out to $50 a month, which is the price for their solo plan currently as of August 2025. But you can save 50% off of your first 4 months if you sign up at my special link, which is timetopet.com/Doug. I'll put that link down in the description below. Now, let's say that you also want to factor in $100 every month to go towards miscellaneous costs like marketing and supplies and things like that. And you just want to make sure that you've already factored that into your expenses here. So all of these monthly fixed costs come up to $229.83. So to find our total monthly fixed expenses, what we're going to do is we're going to add up the annual expenses that we calculated and then divided by 12 and these monthly expenses. And that is going to get us to $355.56. Now again, we're just talking about our fixed expenses here, but we also have that other bucket of our variable costs. You know, all of those random things that come up from day to day. Now what I do and what I would recommend that you do is pick a percentage that you can stomach and that you can afford to set aside as your budget for those monthly variable expenses. Now, let's just say that you decide on 5% of your revenue to go towards these variable costs. Now, again, we added up our income to start with, and that came to $3,000 for the month. 5% of $3,000 is $150. So now what we're going to do here is we're going to add up these fixed expenses with that variable cost budget to get us to a total monthly cost of $505.56. You can see here where these things really start adding up pretty quickly. So then to find our cost per service is pretty simple. We're just going to take that $505.56 in expenses, and we're going to divide it by that 55 total services that we provided to get an average cost per service of $9.19. So then, of course, to find your profit margin per service, you're just going to take whatever it is that you're charging per service and then subtract that cost per service. So let's just say here that you are charging $30 per service. If your average cost per service is $9.19, you're just going to subtract that from the $30 that you are charging, and that's going to get you a profit per service of $20.19. Now, I know what you're all thinking. You're all thinking, I did not account for the credit card transaction processing fees, which are an average of 3 to 4%. And then you're also going to have taxes. You're going to have the wear and tear on your car. There's all kinds of other expenses that go into this that we will all have to account for. But again, I'm just going over a broad kind of generic example here to show you how to do the math. And then you can build your own spreadsheet with your own expenses to figure this out for yourself. But just to give you some good general rules of thumb, you typically want to account for about 30% of your revenue for taxes. Now, my taxes never come to a full 30% after all of my deductions, but again, that's just a good general rule of thumb of how much to set aside. You would always rather set aside too much rather than too little. And I have made a video about average tax deductions for pet sitters and dog walkers. I actually posted that video maybe 3 or 4 years ago. So I'll put a link to that down in the description below as well. There will be lots of links to lots of resources for you in the description of this video. And then talking about the wear and tear on your car, on average, you want to account for 70 cents per mile that you drive that is work related. That 70 cents is the federal mileage reimbursement rate as of 2025. So if you had an employee, that's what you would be reimbursing them for mileage, and that is what the federal government has, calculated as an accurate percentage to account for wear and tear and fuel and all of that good stuff. So again, just a rule of thumb here, it's going to vary from person to person and business to business. Like I said at the beginning, these expenses are going to vary from month to month and business to business, and it's going to vary a lot depending on what phase of business you're in. There's some times in business where you're really pushing marketing heavily, so you have a lot of cost there. And then there's some times where you're just kind of sustaining and you're not really trying to push your marketing that heavy. So you have less cost there. Or sometimes you run out of all your supplies all at once and you have to go buy a whole bunch of stuff. And sometimes you're stocked up. There's a lot of variability here. So, I would recommend that you calculate this every month at the beginning. And then over time, and as your business begins to stabilize, year after year, you'll be able to find kind of your average number of services per month and your average cost per month. And then it makes it a lot easier when you can start working on some just general averages. But at the beginning, you are going to be wanting to calculate this, pretty regularly, because you're just not going to have those averages to go off of yet. The big takeaway here is that whatever you are charging per service is not what you are taking home per service. no matter where you are, no matter what your costs are, no matter what your prices are, none of us are actually taking home what we are charging the client. And if you try to make business decisions and plan for your business based off of just what you're charging the client instead of what you're actually bringing home after expenses, that's going to lead to a lot of issues, and that's not sustainable long term. Especially as your business starts to grow and you start to hire and you have to factor in labor costs and all these other things down the line, this math becomes more and more and more important. I hope that you can see here that this math is really not that difficult and you can do this. Watch my bookkeeping video that I made last week. Watch this video again if you need to. Go watch those other videos that I referenced and take some time to process all of this if you need to. And you can do this math, and you should do this math. You need to do this math, if you ask for my personal opinion. And I also hope that you see here just how important all of this is. I hope that you see that you cannot make really good, sound decisions for your business that are based on knowledge and facts and data without doing this math. So next week, in part 3 of this series, what I'm going to do is I'm going to talk about how we can take all of this different information that we've talked about in last week's bookkeeping video and in this video. I'm going to talk about how we can use all of this information to make sound, knowledgeable decisions for our business. And I would love for you guys to put any questions that you have for me down in the comments below so I can cover them in that part 3 of this series. And definitely make sure you hit that subscribe button to make sure that you don't miss part 3 of this series. Again, I do post videos here on the Doug the Dog Guy YouTube channel every Wednesday. I'd love it if you go give me a like and a follow on Instagram as well. I post a lot of behind the scenes and other tips and tricks on my Instagram story. And you can also sign up for my free email newsletter on my website, which is dougthedogguy.co. I'll put the link for that down in the description below. And if you would like to have a little bit more hand-holding and guidance with all of this, you can sign up for a private one-on-one coaching session with me there on my website, and we can dig into some of your own numbers, on a Zoom call together. I really hope that this video has been helpful, and I really hope that this makes it less overwhelming for you. I know how overwhelming some of this stuff can be for us pet people, but it does not have to be overwhelming. And I'm here to help, so drop me a comment down below with your questions. And with that, I'm Doug the Dog Guy, reminding you to stay positive.